Hey guys, welcome back to my channel. My name is Alex. Thank you for tuning in. And in today's video, I want to talk about what would be the best stock to buy if you're a beginner or if you're completely new to the stock market. And I'm actually glad you guys clicked on my video because I wish I had done this if I was starting over. So I know you guys are super excited to find out what will be the next Apple stock or Amazon stock. But the stock I'm about to recommend here today is not an individual stock. It is what's called an ETF. And it stands for Exchange Traded Fund. So what is an ETF? An ETF is a pooled investment security that operates like a mutual fund, and it will typically track a particular index. So for example, the S&P 500 is one of the most popular indexes out there right now, but you cannot trade it like a stock. Whereas the SPY, which is the ETF for S&P 500, you can actually trade it like a stock. So that brings us to today's topic, which is SPY. That is a stock that I recommend beginners to invest in. It is not individual stocks. With SPY, you can be super passive. So if you're someone who doesn't like to read financial statements or study technical analysis, then this ETF is for you. Now, besides SPY, there's also other ETFs out there like QQQ or VOO. I'm not going to say that SPY is the best, but it will depend on which sectors you like. It doesn't have to be SPY, but for me, a large portion of my portfolio is invested in the SPY, and that is why I'm recommending it. So with the S&P 500 index, it actually consists of about 500 different companies, all within the US, and these are all large cap companies, and they spread across 11 different sectors. Some of its top holdings are companies you may have heard of. These companies consist of Apple, Microsoft, Amazon, and Nvidia. These are some of the best companies in the technology sector right now. And these are also some of the companies I would invest myself if I didn't invest in SPY. And if we look at the sector weightings, it has about 28% in technology sector, 13% in healthcare, and 12% in financial services, and so on, which is a very reasonable mix of how I want my portfolio to look like. So as you guys can see, that it is really well diversified, and it's not just focusing on one particular sector. It has 500 different companies across different sectors, and that's the beauty of the SPY. It is a much safer option instead of just buying a few stocks where your volatility could be a lot higher. And for me, I believe that consistency is more important than trying to find out what will be the next stock that's going to explode. Because with individual stocks, you can make a lot of money at one time, but you can also lose a lot of money as well. It is kind of like gambling with your hard-earned money. And that's why I would not recommend you to do that if you're just starting out. Now, a couple more things about the SPY. It was the first exchange-traded fund started back in 1993. However, with the S&P 500, it has a history all the way back to the 1860s, which makes it one of the most popular indexes. It also has certain criteria for these companies to be selected within that 500 companies. For example, the market capitalization has to be at least $12.7 billion, meaning that these are all large companies. And the thing with large companies are it's more stable. It also has to have a minimum monthly trading volume of 250,000 shares. And that means that it's more liquid as well. You're able to get better terms when you place your trade. And it also has an expense ratio of 0.09%, which is relatively low compared to a lot of the mutual funds or ETFs out there. That equals to about $9 for every $10,000 you invest, which is really not too bad. Now let's take a look at the performance of the SPY. Since its inception about 30 years ago, it has gone up about tenfold, which gives it an average annual return of about 9.74%. If you had invested $100,000 30 years ago, you would have $1 million today. That is actually a pretty good return on your money. I had an account where I was trading frequently in the hope to beat the market. However, there were a few times where I was making a lot of money, but there are also more times when I'm losing a lot of money. So I don't want you to make that same mistake. There's a lot of psychology involved in trying to pick up the best stocks and try to hold it and finding out the exit points for all those stocks. And honestly, for most people, it doesn't work because it's really tough to beat the market. Think about the professionals out there who's watching the stock every day and reading all the financial reports. They may not even be able to beat the market, let alone myself. But with the SPY, with its long history, if there's a drop, it will recover in the long run. And that also means that you have to invest for the long term. You cannot be panicking to sell the stock if it were to drop. You want to stay invested and keep on investing. So what I recommend all of you to do is to set a specific plan of how much you can invest into stock and not being able to see your money for the next couple of years. Because you want to be able to stay invested and not be bothered by what's going on in the world and just keep adding money onto it. Let's say, for example, you started with $0 and you're able to invest $500 per month into buying SPY. Over a period of 30 years, you're still going to be able to end up with about $1 million in your portfolio. And that is based on a 9.74% interest rate compounded yearly. By doing this, you're also using the method of dollar cost average, which means that you're buying more shares when the market is down and you're buying less shares when the market is up, which will give you an overall lower cost basis. And I think the most important thing here is to stick with the plan. One of the trading platform I recommend is Robinhood because I use it myself and it offers free trade. And the best thing about it is that you can set up automatic recurring deposits from your checking account to invest in SPY, and it allows you to invest in fractional shares of the stock, which means that you can invest exactly $500 of your money into SPY, even though right now one share of SPY is about $442. So you'll be getting about 1.13 shares of SPY if you were to invest $500. All right, that's it for this video. I understand that SPY may be boring to some of y'all, but hey, sometimes what's boring is what works. What is the most important thing here is to set up a system that works. If you want to invest in something super passive, if you want to be able to sleep well at night, if you don't want to gamble with your money, then SPY is the way to go. Thank you guys for watching my videos. If you have any questions, leave it in the comments down below. Like and subscribe, because if you guys don't do that, you're going to miss out on future videos where I talk about individual stocks that I recommend. All right, thank you guys so much for watching and take care.